Stocks continue to reach record highs, but could geopolitical tensions stop the rally? Here now is JJ Kinahan, Chief Market Strategist at TD Ameritrade. And JJ, we just had another terror attack in London. We had news that Saudi Arabia and the UAE are cutting diplomatic ties with Qatar. Are these events really going to register on the minds of investors?
Well, sadly, the terrorist attacks have gotten to a point, Scott. As you know, we've seen how many in the last year where they unfortunately are just minor blips on the radar. I think if one hits in the U.S., it may register a little bit more to the U.S. stock market, but you see temporary reactions, and then we just go on about business. It's a sad statement, but it is what it is, that it's become part of our everyday world, worldwide, so to speak. You even see, we used to see a bigger reaction in the currency markets. We didn't even see much of a reaction on this one in the currency market, sadly enough. As far as some of the other things with cutting diplomatic ties, you saw an initial pop on crude oil based on that last night, but even, as we are near the opening now, we see that start to fade also in terms of the move in crude. Eventually, though, to your point, this stuff does have to come home to roost. Let's hope that it's more on the diplomatic ties end than on the terrorism end.
Right. Well, it just shows you how resilient this market is. I mean, forget the terrorist attacks and the geopolitical tensions. When we have clear delays in the market-friendly Trump policy agenda, and yet that's not even registering either.
It really is amazing to me, Scott, talking to people all the time, and we see a VIX at 10, and I know you talk about that a lot on your shows. It's people want it to be higher, but it is what it is, and I think there's a valuable lesson, particularly to the retail clients who are watching you, and that is trade what's there, not what you want to be there or you think should be there. The market keeps telling you it's resilient. It bounces off thing after thing, and we had this sell-off a couple of weeks ago, and it's kind of funny referring it to a sell-off because it was like a 1.5% move on the S&P.
But quite a buying opportunity.
And we bounced back, and that's my whole point. Over the last 5 years, every time we have sort of sold off, it's worked out to be buying opportunity. Not that that can continue forever, but it's kind of like in football when you run a play and it works, you keep running the play till they stop it.
Right, don't ask questions. I mean, if we're in a low volatility environment, embrace it.
Right, and people unfortunately want to, outthink it, so to speak. And the last thing I'll add on that, I traded options professionally for many years, and one of the things I learned early was, theoretically, when the market goes down, volatility goes up. Theoretically, when the market goes up, volatility goes down. We're at all-time highs. It makes sense that volatility is at a lower level.
Now, this week we also have a general election in the UK and an ECB meeting. Which is more important for the markets?
I think that it's going to be the general election, at least in the short term. The ECB meeting, whatever they do with rates, we consume rates pretty quickly overall. But the election, particularly going into Brexit, et cetera, I think has a much bigger effect on what will happen in Great Britain, and ultimately them being one of our greatest allies, that will affect the U.S.
All right, JJ Kinahan, we'll leave it there. Thanks so much as always for coming back. All right, I'm Scott Gamm, and you're watching The Street.